Hi guys, welcome back to our channel. We just wanted to do a quick video on a trade we took last week. I think it was around 21 or 22 September, I'm not sure, but it was on Nasdaq. This is US 100 Nasdaq. So the first thing that we wanted to see happen, we wanted to see this double top liquidity taken out. As you can see that a lot of people trade double tops, so we knew that there was stop loss just above this liquidity, this double top liquidity. So we just wanted to see that being taken out first. Then after that was taken out, as you can see, it happened there. This double top was taken out, stop loss were collected there. Then the market went down. So after that, the liquidity was taken down, double top liquidity. We wanted to see a break of structure, and as you can see, it happened there. Structure was broken there. So there was a break of structure to the downwards. Now immediately after that was done, we identified a potential order block. As you can see that this whole order block is the reason that liquidity was taken out. Then after this whole order block, there was break of structure. So this became an interesting point of interest or an order block. It's not really an order block, it's a point of interest. Now we could have easily took a trade there, had our sell limits there, but the problem with that, will have our stop loss there. As you can know, after drawing an order block or a point of interest, your stop loss needs to be few pips above it. But this is just a lot for us. We don't usually trade like that. So we waited for the market to actually go back and tap into our point of interest. Now, in order to do that, we want to 15 minutes so we can wait for the market to come and tap into that order, that point of interest. Now, as you can see that the market came and tapped into the 1 hour point of interest we identified. After it did that, we waited for the market to go down and break some sort of structure so we can have more reason to enter a trade, because then it would confirm that it's going down. So as you can see, the market came, then it went back and created some sort of liquidity. So that became an liquidity and inducement. Then after that liquidity, it broke structure. So that's what we wanted to see. A nice break of structure there. So break of structure to the downwards. Immediately structure was broken, then it went down, it went up. So we wanted the market to first, after breaking structure, sweep our liquidity. After sweeping our liquidity, then we could enter in some trade. But as you know, after break of structure, what do? We identify a potential order block or point of interest. So that became our 15-minute order block. So this was a nice order block to take an entry because we had liquidity and inducement. We had a nice order block. But the problem with this order block, the stop loss was just too much. You could have taken a trade there, then the stop loss there. Now we wanted to minimize our stop loss just a little further. So when the market was around here, as it was retracing, pulling back, we went to 1 minute in order for us to take our trade. So in the 1 minute chart, that's where we actually refined our order block so that we can try and minimize our stop loss. So in the 1 minute chart, as you can see that the liquidity kept on building up. This is called liquidity engineering. They kept on engineering liquidity, and this was good. Then when we went to 1 minute, we refined our order block to the to this order block, because as you can see, let me just zoom it. As you can see that this order block swept this liquidity. If we can go to 30 minutes chart, then you'll see that it swept that liquidity, then went down. So this point became very interesting. Then afterwards, since our order block was refined and our liquidity was engineered, we had our sell limits just there. So we had sell limits around here and our stop loss just above our order block. Then afterwards, because now this trade started in This trade started in our 1 hour chart. We had to go back 2 hour, 1 hour in order for us to find our TP. Let me just market back. Okay, let me go back just to 15 minutes so I can move with this. So in for our take profit, we had a QML which we identified long time ago. We had a QML. This is a 1 hour QML. Let me go to 1 hour. So we had this interesting point that we identified long time ago. So we knew that the market will come tap into this days before this could even happen. So our TP had to be in the Q just before the QML we identified. Let's go back to 15 minutes. There's a trade that we also tried taking, but the market didn't tap into the order block. We just want to show you that sometimes you can have um limits identified and just place your buy or sell limit, but the market won't go and tap into it. So as you can see that this order block, after it clicked our order, it went and it went down, it broke structure. Sorry about that. Structure was broken here. Here immediately our orders were taken. So here we had a nice break of structure to the down. So after identifying that break of structure, we knew that the market had to pull back and take more orders to go continue downward. So we identified this order block as our 15 minutes order block, as our 15 minutes order block. Now, because we already had this trade going and already in profit, we are more than happy to take a trade and actually place the stop loss there. That's the beauty of having the first trade working successfully. So as you can see that this trade didn't actually get tapped into, so we missed this trade. But anyway, we had this trade going. Then for TP was hit, I think yesterday, today. Yes, TP was hit today, if I'm not mistaken. So this trade, yes, then TP was hit in our QML, the one we identified, the QML for 1 hour. So this is what we mean when we say multi-time frame analysis. You identify a trade idea on your 1 hour, you identify a point of interest, you go to a 15 minutes and you wait for the market to tap into that point of interest. After tapping into the point of interest, then you wait for a break of structure in that 15 minutes time frame. Immediately you have a break of structure, then you identify a point of interest or an order block. Then you go to your 1 minute chart. Then in the 1 minute chart, you wait for the market to come and tap into your order block and you put your sell limits there or your buy limits there. Then afterwards, you let your trade run. Trades like this, they have no drawdown. As you can see that our stop loss was very, very, very small, but our take profit took days before, took a lot of hours. I mean, this is just a lot of hours before our TP could be hit. Anyway, guys, please like and subscribe, and please comment if you like whatever we're posting. Please comment. Thank you.